Every year we hear the same political promise: 300,000 new homes. It's a magic number that's supposed to fix the UK housing crisis, but here's why it's a lie. In 2024, the government delivered 208,000 net additional homes. That's a 6% decrease than the prior year. And despite punchy targets for 2026, planning permission is at a decade low. So what's actually going to happen? For the average person, this is a property crisis, but for a property investor, it's actually a massive safety net. Today, I'm breaking down why the 300,000 new home target will never be met and why it's a permanent opportunity for your capital. If you're new here, welcome. My name's James. I'm the co-founder and managing director of a property investment consultancy called Freighter Property Partners, where we help time-poor investors purchase property across the Midlands, Yorkshire and the Northwest. But this channel is all about your education. Remember, if you like the video, don't forget to hit the like button and subscribe to the channel, but let's get into it. In property, it's really easy to blame red tape or lazy councils on why we haven't hit the property targets in place, but it's actually quite a lot deeper than that. It comes down to 4 or 5 main reasons why we haven't hit this 300k target, and unless things change dramatically from a government or legislation perspective, it's not going to change anytime soon. This first reason is the planning bottleneck. The government talks about mandatory targets, but if we actually look at the data, in 2024, there was only around 242,000 units that received planning permission, which is the lowest since 2014. This means that to hit the 300,000 target that the government have in place, planning permission needs to increase by over 50%, which just isn't realistic in the current market. Council departments are underfunded and planning sites are at record lows, so the math just isn't mathing. The next problem is the viability crisis for SME developers. This one is very difficult to address, and it's one I've not seen that many people talk about. The cost of labour, materials and development is higher than ever, and this makes a lot of smaller sites unviable. This means that for small and medium-sized developers that used to deliver around 40% of new properties into the market every single year, it doesn't make sense for a lot of sites at the moment, which means these sites aren't getting planning permission and less properties are going to be built moving forward. When you factor in high interest rates, the cost of finance as well as tax upon completion, it just doesn't make sense for most smaller property developers. This means that these smaller builders are just priced out of the market altogether. It only makes sense for big institutional developers to build multi-storey developments, and it means that we're not going to get anywhere near the target that we need to hit that 300k mark. This means that the government essentially need to incentivise developers and smaller developers to deliver more projects in a way that still makes sense for them. Whether that's tax breaks or something else in particular, they need to make sure that they have this opportunity to incentivise these smaller developers so they can hit the overall goals. If these developers don't contribute and can't contribute to the overall target, we're not going to get anywhere close to it. Remember, a lot of these smaller developers are focused on more boutique sites in locations where buildings are there but not being utilised, so it makes sense to incentivise them to do as much as possible to revitalise the local communities and produce homes for the local people. The next reason is the construction capacity gap, which essentially means we don't actually have enough people with boots on the ground delivering these projects. The UK construction sector is short of thousands and thousands of workers, and since the pandemic, it's shed 10% of the overall workforce who work on these sites. This means that we're trying to build more homes with less people in a time where materials have jumped around 40% in the last 5 years. And the final thing is the moving goalposts when we look at targets. We're currently struggling to deliver around 200,000 homes a year. We need to hit 300,000 just to maintain in line with the increasing demand. This demand comes from an ageing population, a generation of people that are wanting to buy their own homes, as well as increasing net migration, and ultimately we need more properties. Every year we miss this target, the target gets further and further away. If we achieve 326,000 homes, we're just standing still. Every year we miss this, the goal is moving further and further away, and the housing crisis becomes worse and worse. Because we aren't building enough, the dream of home ownership is slipping further and further away for quite a large part of society. This is going to cause a cultural shift from home buyers to people renting for their whole lives. In my opinion, this is probably why the government have brought in things like the Renters' Rights Bill, because it will cause less friction for people renting for longer, and it gives these renters security that they don't have to move every couple of years. But we're heading towards what I call the Switzerland scenario. In Switzerland, only about 36% of the population own their own home, and the main reason for that is because of the cost of entry and the taxes associated when you own your own home. The biggest property owners in Switzerland are the banks like UBS and Credit Suisse, and it means that people rent their whole lives. In the UK, the median house price to income ratio has jumped from 4.9% in 2002 to over 8% in the current market. In London, it's over 13 times the average person's salary, which means the average couple on the average salary can't get normal residential lending on a home with a 10% deposit. This means that we're slowly becoming a nation of renters, and not by choice, by economic necessity. As the casual landlord exits the market in the next 12 months due to the Renters' Rights Bill, this is going to further restrict supply of properties into the rental market, which is going to increase rental income further and further. This ultimately opens a door for global institutions to create billion-pound deals where they can produce lots of rental properties at one time to try and meet this demand. This means that as a country, we're not just being taken advantage by these global institutions, we're dependent on them. Having said that, the Swiss model isn't necessarily a bad thing. The average Swiss family are definitely better than the average UK family in the current market, but the economies are very, very different. We're ultimately going to have to become comfortable with this cultural shift for more and more renters, and this takes decades rather than years. While this social and cultural change becomes a challenge, for an investor, there is still great opportunity. It's a clear signal of where to put your capital. If you can buy good quality homes in areas backed by significant investment, you're going to maximize your returns in the short, medium, and long term. If you're able to purchase property in a chronically undersupplied market, you're not just investing, you're providing a solution. So how do you play this? First, stop waiting for a property crash. Property crashes come because of an oversupply of property, and we're not getting anywhere close to an oversupply. We're not even meeting supply year on year on year. Second is follow institutional money. Look at cities like Manchester, Sheffield, Leeds that are getting significant investment and improving in the short, medium and long term. We're looking for productivity hubs where employers are increasing but new builds aren't meeting up with that increasing demand. And then we're looking for institutional investment or regeneration, like the Mayfield regeneration in Manchester or Sheffield's West Bar. Big funds understand that supply will never meet demand in the country. It's why they're very willing to be spending billions of pounds in the UK market, and it's why you should feel confident if you're investing for the long term, you're going to build your wealth through property. These locations allow you to find the balance between rental yield and opportunity for capital appreciation moving forward that places like London don't give you. So to conclude, the 300,000 new home target is a political fantasy, but that failure actually secures your long-term investment. It essentially guarantees that a roof over your tenant's head will always be a premium asset, with prices continuing to grow moving forward. So if you're ready to stop waiting around for a supply fix that isn't coming, and you want to start or continue to build your portfolio across the Midlands, Yorkshire or the Northwest, I'll put a link to our website, Freighter Property Partners, in the description, and you can have a free chat with one of the team. We specialise in finding high growth regional assets that the 300k lie makes possible. So let's build your roadmap today, or if you're just keen to keep up with data or follow the journey on YouTube, then make sure you subscribe to the channel or follow us at Freighter Property on Instagram. Thanks again, and I'll see you soon.